Here to discuss how to contain the global banking crisis and the Fed's next move is the president of the World Bank, David Malpass. He also served as Undersecretary of the Treasury under President Trump. And David, one of the things that you have talked about for years and years and years are things like moral hazard and no real interest rates causing the misallocation of assets. And since you were at the World Bank, you think that it's not only ill-advised, but it affects the people you're trying to help and the countries you're trying to help. It adversely benefits wealthy people, wealthy nations, and doesn't benefit poor nations.
Hi, Joe. When you guarantee something, it's not costless, and the cost goes to the rest of the society. So over the years, we've had the 0% interest rates, and that channeled capital into the advanced economies up at the top. And now the governments are all borrowing huge amounts. So the problem this causes for developing countries and the poorer countries, and I think also for average taxpayers, is they don't have access to capital. It's being allocated toward the rich. And my concern looking forward from this current crisis is that it will make the conditions worse in terms of growth going forward. You know, there are guarantees going on around the world for basically for the elite, for the upper crust. That Japan has a cap on the 10-year bond yield. That's a guarantee. The Fed has its deposits guaranteed. You know, they can borrow unlimited amounts to buy bonds. And the bonds themselves are a guarantee for people that sell bonds or issue bonds. So we've got this kind of circular system where all the capital is absorbed by the rich or the advanced economies, and there's not enough to go around for the rest of the world.
What is this, putting all this together into a cauldron and letting it simmer? What's the future look like? Is there a positive outcome? Is there still time to somehow let things sort of ease, or are we going to face bigger problems down the road? And are we facing them now?
Right now, you stabilize, and so I think they're doing that. I was pleased to see this First Republic direction, also the Credit Suisse. There are all different pathways that they're using to stabilize the current liquidity problem. But then you've still got to deal with the long-term growth problem, the duration problem. That's where the world has been for years and years now, 10 years, borrowing short and investing long. The Fed is the biggest carry trade, and other major central banks, they borrow overnight and they buy bonds. And so it takes years and years to unwind that. So I guess the longer term outlook is asset repricing and slow growth for a period of time, maybe years, as we try to reestablish some kind of market principles.
So the slow growth, I made the point earlier, if the Fed were to guarantee every deposit in the United States, that's a lot of money, isn't it? And that would be a lot of printing. And obviously, if you do that, inflation is going to we're going to be like Argentina, where it's 100%. So it's a slippery slope to go down. Why did it become necessary for these special people out at SVB?
When there is a bank failure, you're in a difficult situation, so you take emergency actions, and that's what they did by naming it as a systemically important financial institution, so they could do the bailout or the support, the guarantee for the deposits the way they did. Whether that spreads to the rest of the system is going to be really important. It's vital for the U.S. and I think the world to reestablish some concept of small business lending from medium-sized banks. And if all the deposits migrate to the big banks, then who is going to be on the ground in communities making small business C&I loans, commercial and industrial loans? That's a critical part of reestablishing growth. You know, we've lost the interbank market, the repo market. These are critical mainstays of capital allocation within the U.S. and really worldwide, and they've been lost in over the last decade. So reestablishing some way for money to move around among banks in a market-oriented way is really important for growth. And that, I mean, you know, the ultimate goal is how do you get people's incomes up from the median income up, the middle of the society's incomes to start going up again, both in the U.S. and worldwide in developing countries.
David, when are you leaving? You're leaving at the end of June?
Yeah, by the end of June. It's been a very busy, really 6 years. You know, I did the World Bank for 4, the U.S. government two years prior, and so I'm looking forward to new challenges. But we're finishing up some really important projects at the World Bank, so I'm happy the way that's been going.